It is time for a new update here on the Bitcoin price. Bitcoin is back at the $76,000 and I exactly predicted this in my last video. I told you guys that if we cannot see at least a consolidation in the traditional markets on Friday, but any kind of bearish movement, Bitcoin will take this sentiment with it into the weekend and Bitcoin will correct to the downside, most likely back to the $76,000 level. And after we closed our traditional market very bearish on Friday, Bitcoin started correcting first slowly, but then on Sunday relatively quickly, as we expected it, back down to our very important monthly support of $76,000. On the smaller time frames, we now even wicked all the way down to the $74,000 level. And the question now is, what does need to happen so this bull market actually can continue and we are not facing the risk of right now entering a new bear market? I will tell you exactly what to keep an eye on now. And besides this, as always, I would highly appreciate if you would smash up a like. Don't forget to subscribe, activate the bell. My last video for some reason did very poorly. Not many people saw it. I wish that it would have been suggested more powerfully, because then more people would have been prepared for this weekend correction for Bitcoin. But yeah, so maybe you smash up a like, maybe we can reach 1,000 likes so this video really gets pushed out and people don't get panicked now and know exactly what to keep an eye on. Because not only are we going to take a quick look at the Bitcoin ETFs and our liquidation heat map, the traditional markets are looking extremely horrible anyway, so for now we have another week to wait how they develop. But for Bitcoin there is a lot to keep an eye on currently, because as you guys know, this $76,000 level that we predicted to be reached once again on Friday already, this is our monthly support. And this monthly support is for sure highly important, because if it gets broken to the downside, our next monthly support is at the $51,000, $52,000 level. And especially if we break this support to the downside, it would open up the doors for a very likely up to 50% correction all the way down to the next monthly support here. And I have to tell you, yes, also in the last bull market, after we got rejected from our 11-year resistance here on the monthly, we saw a 50% correction all the way down to our 11-year monthly support. So there's a very high likelihood that this monthly support will then be retested once again. So our hope is that this won't happen, because this will really break bull market structure here this time compared to the last time. We would really be looking to enter into more of a bear market then if we reach this price level this time. So we really don't want to see this 50% correction, because a very aggressive run up back to the $100,000 level, like it did after we corrected all the way down to $30,000 and then we had another run up to $70,000. This time it's a lot more unlikely that this happens. But in general, we need to understand that this will be highly dependent, and this is something I really don't like. I would love if this all would not be so news-based currently, but all of this is very dependent on the tariffs that are coming from the US. If these tariffs get lifted, for example, or there are big trade deals happening with other countries and the tariffs are getting reduced to zero, which I'm not sure that this will happen, as the tariffs right now are pretty much based on the trade deficits, right? And not on tariffs that are applied by other countries. So how would an agreement be reached there? That people from other countries need to buy US goods by force? I mean, this doesn't work, right? So it's still very uncertain, right? And this is also what the traditional markets are showing us. So what we need to see is that Bitcoin is starting to completely distance itself from the traditional markets, just how gold is doing it, right? At the end of the day, our hope is that Bitcoin in the long run will become a new safe haven asset like gold, something that people not only use to trade, but also use as a safe haven in case of crisis, right? Similar to gold, not compared to the dollar, right? People are not necessarily going into the dollar if there's a big crisis, because they have the fear of, for example, hyperinflation. That's why they go into gold. That's why we see gold shooting up so much currently, while the traditional market is very much pressured. So as long as we cannot see that Bitcoin is actually moving sideways or to the upside while the stock market keeps going down, we cannot expect to only look at the Bitcoin chart to predict the future of Bitcoin. This would be foolish to do. And I need to tell you that in general, we can hold this support level here on the daily. This will be a nice long opportunity. If we close below, we retest the resistance on the daily, we fall a little bit more to the downside to the low $70,000. This can be a nice short opportunity. But in general, it doesn't matter if this daily candle closes below, if this daily candle closes above. It doesn't even matter if a weekly candle now closes above or below. This is not relevant. The only thing that is relevant is that at the end of this month, Bitcoin is above the $76,000 level once again. Because this is a monthly support, not a weekly support, not a daily support. You can see it exactly over here. We had massive wicks, right, of multiple thousands of dollars at that time, over 10% wicks below the support. But it's the monthly candles. So the most important thing is that in 23 days, we see that our monthly candle closed above the $76,000 level once again. If this is not achieved, be prepared that we will have a more or less pretty ugly summer for Bitcoin this year, as long as we don't see some massive crazy news that all tariffs have been lifted, everything is back to normal, we even have better trade deals than before, and other countries and the US themselves are all charging 0% tariffs, for example. But how realistic is this to happen in a short amount of time, right? It is right now not looking like it's going to happen in a very short amount of time. So we need to look out for the news this time compared to otherwise. Normally, you know me guys, I'm mostly only looking at charts, I'm only trading the charts, I'm never looking at the S&P 500. But currently, we need to be aware of the situation and also look at it. Because we need to keep in mind, yes, the Bitcoin ETFs have some outflows, but the most important thing is that they still have 100 billion market cap in total. This is a quite relevant market cap of Bitcoin's total circulating supply in general that is really actively being moved. And all of this $100 billion was accumulated quite recently for the Bitcoin ETFs. And by who? By institutional investors and institutions, right? Institutional investors and professional traders, right? And investors. So we need to keep in mind that these people see Bitcoin as a risk asset, and they will also sell out of the ETF again, which leads to Bitcoin being sold in the case that the traditional market continues to go bad. So keep this a little bit in mind. For now, I can tell you, don't panic even if we fall below the $76,000 level. The only relevant thing is if this monthly candle really closes below, then it will be getting very dangerous. But if we have any signs that this is becoming the more likely scenario by the traditional market, for example, continuing to correct within the next 2 weeks, us getting multiple rejections of this resistance on the weekly and the daily time frame, yes, then we can go into a short position because we need to expect Bitcoin to potentially fall all the way down to the $50,000 level again. But for now, guys, smash up a like, don't forget to subscribe, activate the bell, because on the liquidation heat map, guys, I almost forgot to talk about it, but why did I forget to talk about it? I mean, you can see it. We liquidated everything on the long side. There's almost no positions that are right now waiting to be liquidated on the long side anymore. And the market makers don't really have the incentive to liquidate this big stack of liquidations up here. First of all, to get the price all the way up to $88,000 again, this would need a massive amount of capital by market makers. It would not be worth risking this amount of capital only to grab some liquidations up here, especially because looking at the funding fees, there is still a healthy amount of new long positions being entered into the cryptocurrency market. And as long as this is the case, these newly entered long positions will even out the remaining short positions that are at these levels over here that will over time just take profit and will close these positions naturally, right, with a profit. But this profit will not be taken by the market makers that originally matched these positions up here. No, this loss will be taken by long positions that are being opened below or at the same price level. So all of these longs that are being closed and stopped out on the way down here, right, are already making the profits that are making these losses of the longs are making up for these profits that shorts are making against market makers here potentially. So that's why I don't think they are all too worried about that. But for now, guys, we are going to see us in the next video. We will look at the smaller time frames and try to find out if this monthly candle will close above the 76,000, because otherwise, guys, $50,000 might be a realistic target for Bitcoin once again if we don't see a massive change in the current political sphere where we suddenly maybe have 0% tariffs once again. But now, guys, we are going to see us. See you soon. Bye bye.